Hello, 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 everyone. How is everyone doing today? Just got done recording the Jim Iorio podcast, Futures Edge. So sorry for being a little late. That episode will drop on Monday. Given some longer term thoughts on stuff that I don't necessarily cover on these live streams. So thank you everyone for tuning in. Good afternoon, Patrick. Welcome, 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 Stafford. As Bob Euchre used to say, I must be in the front row. Well, you got a front row seat. Good evening, Anissa. Hello, AP's World. That mini double bottom in the S&P worked out great today. It did work out great indeed. Buy the dip and trash the dollar. Hello, Amadeus. Amadeus. Welcome. Oh, Sashi, good evening. Thank you, everyone, for being here. Again, sorry I was a few minutes late. Hey, CD, good day. Good day to you. Hey. Good day, Ted. Wow. We got new faces. We have some of the usual crew. We have many different people here. Thank you for tuning in. And by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. All right, that's out of the way. Just me this afternoon. Not going to be a super long live stream. I've been talking now for, boy, a very long time doing the podcast. So getting a little talked out. We already covered non-farm payrolls this morning. By the way, yes, looking at the headline numbers and the divergence between the surveys, which we talk about, Jim and Bob go into it on the podcast, so I'm not going to ruin that, but I think they will reconverge and stuff in January will be lowered drastically from these employment gains. So that's just a little preview there. A stock market pretty mixed today. It was lots of things gapped down and rallied back. So I'd call it a pretty mixed market. Consumer defensive, pretty decent rotation into consumer defensive and basic materials. You can see that in the sector, basic materials leading the day and consumer defensive. Healthcare still up there in the list. Technology taking a little pullback, but overall just a very balanced mixed day between the sector leading and lagging. Fed watch still that 77% favors the 50 basis point hike. I don't think anything's going to change that. We'll just keep checking in. Fear and greed still in greed mode. Why do we watch that, by the way? Because it's a little great indicators. When it gets to greed, especially upper greed to extreme greed in a bear market, you really start watching for more significant topping patterns. Another thing I want to touch on, I mentioned yesterday from a Tom DeMark standpoint, we are running up into a fair amount of potential reversal signals. Does that mean new lows? Probably not just yet, but the extent when we do finally get a pullback, the extent of the pullback will tell us a lot with the underlying strength of the market for the rest of December. You can see here, spike into the rotation zone. We had the 4,008 key levels down here. We had that little 5-minute double bottom, 15-minute, 5-minute double. I had to take it off the chart because I was recording. But whether you're going with conservative or aggressive targets, here, this was just, hey, the break, the retest. Remember, don't freak out with the retest and then continuing the pattern. Little mini double top going against strength, coming back down. Consolidation, lunch, and then the end of the day, little ramp up into the pre-morning resistance area. So overall, gives us some stuff to watch for because the 4-hour rotation zone is right at the previous resistance that was tested and held today. But this will give us great areas to watch for Sunday night and Monday morning for a potential more significant breakdown. Is this a double top pattern? No, it's not reversing technically enough of a move, but I will be utilizing this 4,008 has now become a pretty significant level. especially with the successful retest of it today. You see just above this emotional candle close, successful retest, stalling out pattern there. So that's one to put on your charts, set some alerts, because we start breaking down there, we could see more of a controlled drop. Is that full-blown bearish mode? No, because we still have the rotation zone in the way. We're back. Remember, dipping below the 200, closing above the 200 now also still. So still trying to hold up. And from probability standpoints, that 87.5, that 42.24 is still a magnet price. That's really where we stand. My key line in the sand, by the way, is the first one is 39.11. 39.11, we start getting a daily close below there. It starts getting into more of an uh-oh. Spidey sense has to be rising, because we could also get, depending on when that happened, this upward sloping channel could get out of the way. The 50-day exponential would be out of the way, and the little top here. So that's key thing I'm keeping an eye on. Coco Bob did not break the VIX. Short-term maniac options traders broke the VIX. Bob did not break the VIX. Hey, Paul, could you explain when you have a %B buy or sell, is that a crossover of the midpoint of the Bollinger Band? No, it is using a short-term Bollinger Band settings with some custom stuff. I'm going to release that very shortly because it's really handy, especially %B buys. In a bull market, %B buys on weekly patterns on stocks are absolutely fantastic. They are a thing of beauty. By the way, well, I'll save that for the channel subscribers, though. I got to put out a video this week on a key stock that triggered, too. I put it in Discord. But Bollinger Bands are great little patterns. I like using the %B indicator, which is down here. I don't need to keep more stuff cluttered up here on the stock, on the charts, because I can watch, and this %B just calculates the essentially the relationship to the Bollinger Bands, and when we get key reversal moves, it's fantastic. So, can I give you some knowledge bites on Tom DeMark indicators? Yeah, I mean, Tom DeMark's brilliant guy, by the way, and came up with a lot of really good indicators. Some of them are on the platforms, but I like this TD sequence. The really good ones are programmed on Bloomberg terminals. And there's a couple other platforms. These aren't bad, but they're not entirely in line, so I don't promote them on here. But the sequential ones are the ones you want to, if you're trying to learn one DeMark pattern, use sequentials. And I compare some of these, and I've modified some scripts and everything out there for my own self. But you want to learn the sequential patterns. And they are much more complex than you think. So it's not something that you're just going to sit there and learn in 10 minutes. I watch for groups of exhaustion, whether they be buy signals from sell exhaustions or sell or potential short signals from buy exhaustions, where we're running into a lot of potential short setup signals in a lot of stocks. So I am keeping an eye, and just here we have waning momentum. You're also just going to see that with waning momentum coming up against, this is the weekly S&P chart, and we're coming up against this downward channel line. So I'm just keeping an eye. Should we get a more substantial pullback? Does that mean new lows? No, we have a lot of stuff to go through just yet, and we have the Santa Claus effect going in. Especially the last week of the year is notoriously strong and thin markets. Hey, George, welcome. So you want something short-term, set an alert at 4,008. Next alert you should watch are these key lows. These key lows, remember, look at the candle bodies. Candle bodies are going to tell you more than wicks. You can fine-tune things with wicks, but the first sign is this 39.55. That's also below the daily rotation zone. But the key levels is 39.11. 39.11. Just want to point that out. We still have the bullish. This did not invalidate the potential double top in the NASDAQ yet. We still have the bullish other play in place. So nothing's really changed there. I'm really focused on this 368 target area. That is the main thing I'm watching there. Other than that, today's low area with the support base and this prior, it wasn't just this support or becoming resistance, then support again confirmed today. It was established back on the 25th of October. Verified really with today's move again. So you want an alert. 11,750 is the first key warning sign with the NASDAQ. The first early warning sign, should I say. A break above this 12,000, you could go about 12,100. That's where I'll bump this up a little bit. 12,100, then I'm really gunning towards this 12,368 area. Futures Edge will come out on Monday. Monday. Thank you for asking, George. So, oops, I still got another comment from before. Thank you again, CD, for being here. Hey, we have done... No, we have not done the spiders. I'll jump to that real quick right now and smash the like the mic button. I hate saying like the mic, but it is sort of catchy. Spiders, learn these concepts. Sometimes the simplest concepts are the best. Pullback, prior resistance becoming support. I believe I talked about this key level today. With the rising rotation zone, which we've talked about before. Breakout, return to the breakout level, rising rotation zone, rotation back up. So that is now your first line in the sand, this 402.40 area. I'm going to be utilizing that as my key level to warn for a start of a breakdown. That's my first little key level right there. Very simple concepts. But the simple concept, so many people overlook simple. They overlook simple for complex. And again, if you made me take off a bunch of stuff off my charts, could it still be traded successfully? Yes. What am I watching for in the spiders? Well, we trade above 408.06 on Monday. All right, during the regular session, we do have a potential double top. Does that mean this rally stops? No, but that re-solidifies this low, the low of 402.17, and we could get that quick reversal back to at least 393.25 area. So I will be keeping an eye on that. It's not a valid double yet. If this were to just break down with this, it would go into a single candle clear path though. That's your key breakdown area. And just because you have a potential, this is why I always hate listing out, we have a potential double top, and then people think, oh, you're bearish. No, it's keeping an eye on what key things change, because when you break below that level, what does that mean? You're back below the 200. You're trading into the rotation zone. Does that mean, hey, we're going to new lows? No, we're targeting a key support area then. But it's wise to be aware of that, especially if you have positions that are strongly in the money with topping patterns on it. You may want to get a little aggressive and take something off the table and wait for the pullback. The Q's very, very interesting. See, closing roughly right at a key resistance close, could not get the close back above. Powell, we'll call it Powell Wednesday. J-Pow Wednesday. No close above J-Pow Wednesday. So that's the little thing from a double in. This bigger double is still in play below 279.17. Do we have a little mini double? A little mini double? Not yet. So that's what we're watching for. And we still have a little potential gap fill Today did not close the full gap. Today's high 293.45. The close 293.72. So we still have that magnet. Now that magnet price could take us into another mini double. So a double within a double. So then we'd have our bearish roadmap laid out, our potential bearish roadmap. That doesn't have to happen. Our key next target is 297.40 area. All right. Today's phase that pays. Like the mic button. I like that. Today's phase that pays. The phase that pays. CD, appreciate your channel. Thanks. Watching from work, and sometimes I just listen in. Good stuff. Well, you know what? I really appreciate you being here, CD. Even if you just have to listen in. We try to cover things in our own way that, that people don't cover it the same way we do. So, I appreciate everybody who's here. Especially Coco. Why is the market still holding despite the bad news? What was bad news? I mean, there was the trigger effect from non-farm payrolls thinking the Fed was, but the Fed's going to do 50, and then we're going to see what they do in February. Nothing's really changed. And I think then people looked behind the numbers and realized the non-farm payrolls numbers, when you compare it to the employment survey, where the employment survey has been losing jobs, the non-farm payrolls have been holding up and increasing jobs. But non-farm payrolls, and I don't think there's a conspiracy here, other people do. Non-farm payrolls measures, like if I have 3 jobs, let's say I have 4 jobs at 10 hours each, minimum, or like even $15 an hour jobs. Sometimes I feel like I have 4 jobs. Those are counted as 4, and I had to get them recently, because of inflation. Those are counted as 4 jobs in non-farm payroll headline number, but in the employment survey, it's counted as I'm working 1 job. So you have a disconnect there. I think the non-farm payroll numbers, and there's a huge annual revision, and I think your huge annual revisions starting next year is going to wipe out a lot of these job gains. So keep that in mind. Just going to cover a couple things. The notes, another thing of beauty here. Another thing of beauty. I did not cover this pattern this morning, but I know some people spotted it because they reached out to me. They're like, did that double just trigger? Then you got the pullback. Bam, bam, bam. Coming in, filling the gaps so you hit the targets. Again, you don't have to trade these things to learn the patterns. I don't care if you trade notes or not. You can apply these things to whatever you're doing. Bam, bam, bam. What's the next target down? You have the gap fill. Gap fill, and then you measure out to see. This was interesting, sloppy from that perspective. But the key thing is where I watch for that. If it does not come down to do the double bottom, you watch for the little reversal play. I've talked about this before. We did not get the close below 62.5. So I'm watching for the reversal play in there with the market starts to running. And you got the reversal play in there and then the breakout and back to the high area. I actually have to bump up the retracement harmonics now because we are very near. Oops, I should have taken off those other key levels. We are very near that next topping pattern, 115.03 and a half, which we could easily take out Sunday night / Monday based off of this. Between 115.13 and 117.01 is a major potential harmonic topping zone. So I will be watching for at least a shorter term to medium term top forming up in here. And by the way, from a yield perspective, where is it? There we go. Yield perspective, the double top. Wham, bam, thank you, ma'am. All of it done. Done and dusted. Key next supports 343 area. So The yield completed the double top. Let's just peek while I'm at here. I did not get a chance to look at the 10-2s this afternoon. And the 10-2s, good, all right. Why did I say good? Because not only do I have a little reverse harmonic level to watch for next, those are the minor levels. The next, if we really break down, is minus 87.5. But I do have the potential double bottom pattern to watch for a minor steepening. So we also start getting this minor steepening, I'd be more inclined to watch for that short-term top in the equities. So we have a great little potential pattern. What else? Dollar index. Dollar index getting shablasted today. Is shablasted a word? But that is a new word, shablasted, for what happened to the dollar index today. I'm watching this going into next week. It is trading at a very key level, and the settlement's now below the 50-week. Last time I checked, this was actually above the 50-week. What am I watching for longer term, just to put it out there? If we get a rally, I'm watching for a topping head and shoulders pattern, which could be a long-term top in the dollar index. We need to see if we can get a bounce out of it first. VIX. Coco says Bob broke the VIX. No more potential double bottom, so never triggered or confirmed. Trading lower. Not much else to say. Key resistance is now back at about, I'm going to bump that level. Take this level down. Take this level down. Key resistance coming in at 2032. So that'll be starting to get above about 21 is still a warning sign for me that we could be putting in more of a short-term top in the equities, but there's no fear in there. There's no, I mean, this is based off the monthly options. There's no people rushing into monthly options to buy at this point. Hello, Dr. M. Non-farm payrolls was an event. You saw it in the price action today. But it didn't change the course of anything. Ted, Natty Gas. Let me get to Natty Gas. The oil did not trigger the double bottom yet. Natty Gas had the breakdown below the key area. So there's no great short here. There's no great short still going on right now because it's going into a lot of very key support. What am I watching for now? Let me just take off a couple things right here. Let me just reverse this. I'm watching, look at where the 62.5 is. Right at this major support ledge. So I am watching for some kind of pullback pattern in here. Anywhere between 617 and about 582. I'm watching for a bottoming pattern, closing in on oversold levels with cycles hitting the bottom. So that's what I'm watching for another quick little potential bullish play. I talked about crude, which confirmed the double bottom, but the double bottom's still not triggered. Not triggered. So I'm still keeping an eye for that for any potential bounce. And we do have the OPEC, the virtual OPEC meeting this, I believe it's this Sunday. If we rotate back down, you see us stalling against the rotation zone. So we really start breaking back below this 79.80 area. I'm going to be watching for a retest of these lows with that rotation. All right. Let's see. Oh, by the way, we talked just a little preview. We talked copper on the podcast by anybody who's watching copper short term. Yes, this was a little valid double bottom. That already went to all its targets, and this is within a bigger weekly pattern. Copper should remain a play in the near future. So this is definitely something to take in mind, especially if the dollar, we could get a pullback based off if the dollar gets a little bounce. But other than that, if the dollar really starts tanking, watch your precious metals and industrial metals like silver. Silver coming up. These are still, in my book, trading around a core position. Gold getting to very overbought and topping area, but I covered on the podcast what the key levels I'm watching in there are. I'm actually watching for a short-term pullback. Even a platinum, which I did not cover. The only negative thing, this would be from a great stop level, you see the double bottom triggered, stalling out at that first target and forming a potential double top. So that's what I'm keeping an eye on with platinum for a pullback, but this does not have to trigger. We could just get the pullback into there. All right. That should do it. That's enough to cover for a Friday. Real question is why the prop? What is on the way? There's always a motive. I'm missing the question. Why the prop? So you'll have to clarify bear better than beer. Have a great weekend to you too, Jacob. Hey, Dave. Hope you are having a fine week that's wrapping up. Just going to see if bear better than beer can clarify. Why the prop? Again, you just have to make... I might be slow on understanding the questions. It's been a long day. Just seeing if there's anything else. Let's just peek in on a couple stocks and see if that's getting clarified. If not, you'll have to come back and re-ask it. Why is the market getting propped up, you mean? Why is the market market getting propped up? I mean, you're still in bullish patterns. You still have bullish probabilities. You still have people with the no-brainer trade, the December no-brainer Santa Claus rally trade. You still have people, hey, the 50 basis points is dovish. So the short-term trend is up, and you have the year-end seasonals that are up. So your probabilities, your year-end patterns, your seasonal patterns are still pointing up. And any pullback comes into support. So is it getting propped? That's just people, again, buying the dips into year-end. Greed is in. The greed is back. VIX at 19 looks trappy to you. Well, I mean, once we get a stronger sell pattern, there just aren't enough besides those DeMark sequential exhaustion patterns setting up. So that's about it. Do I think there could still be the rug pull? Yeah. Do we have a pattern for it yet? No. So I got to go with the already probabilities in place until something else changes. And that's the nature of it. Riggers love low volume days. It's not rigged. This today was not rigged. And this volume, I mean, this was pretty decent volume. It matched yesterday's, and look at the bull moves. Recently, I want to point something out just doing volume analysis. Remember on the sell-offs how the volume was bigger on average, on not every day, but on average the bear days were bigger volume than the bull days. Well, look at recently, bull days. Especially key reversal day right here from Friday the 4th. Bullish volume. From the CPI Thursday. Bullish volume. From Powell Wednesday. J. Powell Wednesday. Bullish. Pullbacks. Last 2 days, little pullbacks on much lighter volume. So you still have volume confirming the short-term trend. But this wasn't a low volume. This was a low. These were more low volume than this. And this was incredibly low, the beginning of Thanksgiving week. But this was not, I didn't see anything that was like, hey, it was just rush in after the open, buy the dip. All right, first off, the markets, the pattern, which is still holding up, and the overnight, the market sold off pre-open, okay? A lot of times, the trade for the last few years, which is still roughly in place, is buy the close of the U.S. session, sell the open of the U.S. session. Or sell the European close. So, that pattern is still roughly somewhat in play, and that's not because it's rigged. There are too many people who have been conditioned to think this is a complete... It's hard to rig. You need a lot of money thrown at something to really influence the S&P. You also have people that are still conditioned. I don't think this is based off rigging. I think this is more based off, it's all the Fed trade. It's all the Fed is going to pivot, pause. It's one of those P words because the Fed's going to rescue the markets and we got to buy it. We got to buy it. There's tons of traders who have been in place that the Fed will always still rescue the markets. And we never have the capitulation move yet. It's still buy the dip. Buy the dip. Oh, well, that dip didn't quite work. Well, this dip will work. The Fed, they've got to pause. They've got to pivot. They've got to whatever. It's the nature. Remember, so many traders have come in the market. Even, I'm talking big Wall Street firms since the Fed's kept interest rates low and it's always been there to save the market. This is the first time it might be shifting. But it's going to take a while to uncondition this movement. And there's a lot of people, even long timers, who say, hey, the Fed, this is it. December's it. They're going to pause after December and then they're going to have to rescue the market next year. They're going to start cutting. Buy now. Because that's what's been conditioned. I think it's still tactile trading mode. So, I think the bigger term, when you have more earnings when you have multiple contractions again, where do we sit? I'll go through something else real quick and then we will call it a day. Just want to show you something. Do I think we could easily still be bullish through the end of the year? Yeah, because you got seasonal patterns. We got other things in there. But we don't have major earnings contraction yet. We're back to, this isn't updated just yet, but we're back above a P to E ratio of 21.8. Which is still at the high end of the spectrum, especially if we're not in a recession yet or going into a recession. This is still, we could have a room left to run. Okay. S&P earnings. Look at this. Do you see, yeah, it's off the highs, but do you see a major earnings recession just yet? This is not priced in yet. I don't see any earnings recession priced in based off of this earnings and the PE ratio. you start getting this really starting to pull back, like in a recession, we could see that's where you'll start to see that pullback towards 3,000. We have not had that yet. Start watching your first quarter earnings, even some fourth quarter earnings, which will come out in first quarter next year. First and second quarter could be a doozy next year. You gotta trade what is, not what you think should happen, though. All right? You know, and it doesn't help your mindset to go around thinking everybody's rigging everything. Now, we want to dive into some of the crypto markets. We can talk about rigging stuff and unbacked stuff and fakey fake coins and wash trading and everything else. But you're not wash trading the S&P. And also remember, you have these markets. It's a global marketplace. That's why there's the only short break in the futures. Otherwise than that, the futures are trading most of the day. Why do I follow the futures more closely than the spiders and the Qs? Because the futures are open 23 hours of the day, and you have lots of stuff going on in Asia and Europe. And people use these to hedge and to play moves. Fine, you want to open a short position. It's why I wait for a short setup. Do we have even if we dropped a bit, do we have a short setup yet? Not a great one. Not in these even the DeMark things, which I don't cover on this channel because I'd be here for 4 hours a day. We don't have. Could we rotate back up, make a little double top, which could be a warning sign that we're going to get a potential bigger pullback? Could we break down below the channel, which then another sign that we get the bigger pullback, especially this 39.11. That's why I said mark it on your charts. You don't have to sell up here. A short trade can be initiated down here. Stop trying to call every top. Worry about taking the chunk out of the middle. Remember, when did this little inverse head and shoulders trigger? Back on the 24th of October? Did it buy here? No. And remember, it completed here. See, this was a completely... Here's where I have a problem with people. If people focused on taking the chunk out of the middle, they'd be a lot more successful traders, both long and short. I'm just marking off the chunk out of the middle. Here to here. You take that out consistently, you're doing good. You're a good trader. But people want to do this. They want to buy this, not even this close, because they're like, well, I wouldn't have sat there through this pullback. They don't even want to buy the reversal candle close. They will literally want to buy here and sell. Oh, well, let's say we tanked on Monday. Let's say something happened this weekend and we come in Monday morning and we're below the 39.11. Everybody's like, oh, I should have sold this. But there's not a great top signal yet. They're worried about buying here and selling here instead of taking the chunk out of the middle. We get this. There's a reason I'm listing this 39.11. Let's say it wasn't let's say we got a short, more of a breakdown pattern below there, and you rode it back down to 3,600. That's taking a nice chunk back out of the middle again. And then it could potentially go to new lows. Are we anywhere close to that yet? No. And don't try to capture every micro move. You're not going to successfully do it all the time. Are there moves? Yes. But to say I'm selling here, I'm buying here, I'm selling here, I'm buying here, I'm selling here, I bought the low today. I sold here, I bought here, I sold, but you're not going to do it. Not going to do it, not going to happen. Not consistently. You're not going to capture every move. It's why a lot of people say you can't be a successful day trader. Yes, you can. The problem is why a lot of people aren't successful day traders is they don't wait for they try to trade every day and they don't wait for the high probability setups. There are days there are no trades. Even if the market moves, there are days there just weren't any reliable, decent setups. So that's the way it is. But everybody thinks, because I'm sitting in my chair, I got to trade it every day. I got it, and I got to, wait, I can't miss that move. I can't miss that move. I can't miss that move. Every move is not your move. Every trade, every potential trade is not your trade. Definitely every move is not your move. So, yeah, would I be upset to like we break down and then we get confirmation and we get deteriorating internals and we have to short 39.11 for a or 3900 for a 3600 potential draw pullback? That's not a problem. Well, but you didn't short 4100. Okay. The probabilities didn't shift yet. The probabilities still say higher. But that's why they're probabilities. Even at a 70% probability, is 30% of the time, it didn't happen. You know, if you can even be a 60% successful trader with proper reward to risk, you're doing good. You're doing way better than 95% of the people out there who try to this game. But it also means 40% of the time, you're going to get stopped out. You're going to take a loss. And that's the nature of trading. Human psychology aligns market dynamics with price action, reflecting sentiment. You take your chunks. That's what you do. Those chunks are nuts, and I'm a squirrel in September. Exactly. You don't have the squirrel. A greedy squirrel tries to bury every nut. Did you know squirrels? For what is the percentage of nut? They bury a ton of nuts that they don't remember. They only remember like 20% of the places they buried their nuts. That's why they got to bury so many. Because they forget about. They forget. Maybe they bury so many they forget where they put them. But you don't have to grab every acorn off every tree. You grab the good acorns. You don't have to bury every acorn. Yeah, they do plant trees. All right, with that, I'm calling it a day. It's been a long week. Thank you, everyone, for tuning in, and I will talk to everyone in a couple days. Have a fantastic weekend. Bye.